Alright, good afternoon everyone. Today's the 25th day of April 2013. Let's just start right out with the results. We are plus 17 on the Russell this morning, plus 5 on crude, plus 16 on natural gas, and plus 13 on gold. So we had a pretty good day this morning in the live trading room. The last couple days were a little slow. There wasn't that much opportunity, but today there was ample opportunity, and I missed a ton of it. But that said, we were up $510 a contract this morning, which is enough. Alright, let's go through the spreadsheet. Okay. Today is the 25th day of April. This morning we had 17 ticks profit on, what is that one? Russell? We had 16 ticks profit on natural gas, 5 on crude, 13 on gold. 13 on gold. We didn't trade any copper this morning. I didn't have enough DOMs open to be able to trade copper. But our total, it took us 28 minutes and 6 trades to make our 2 points, which we were at $130 a contract at that point on closed trades. And we had a total of 14 trades altogether today. Okay, we had 185 trades so far this month. We are up $4,405 per contract so far this month. And if you apply an $8 commission per turn, you're still up $2,925 a contract. All right. Our big gainer so far for the month has been the Russell. We're up $1,930 on the Russell alone. All right. That is the spreadsheet for the month of April. 17 trading days we've been in so far the month of April. We took 2 days off this month. I took 2 days off. Dwayne didn't take 2 days off. I took 2 days off this month. Let's see. If you have not taken a free trial with us, go to www.cfrn.net/apply and sign up for the free trial. In the free trial, you will get access to everything that you see here. You'll be sent an email with a very nice new video in it. Thank you, Bert, Leslie, for putting that thing together. A very nice new video in it that shows you how to download the trading platform. It shows you how to download our indicators, and once you get the indicators installed, if you want my layout so your charts can open up and look just like mine, all you have to do is send me a quick email and I'll tell you how to do that. Alright, I'll either send it to you or I'll show you where it is on the website. Now, so you have to sign up for the free trial to get all that. You get it for 5 business days. You also get access to Dwayne and myself. You get to ask as many questions as you want. It is your opportunity in the free trial to experience the full effect of our indicators, our proprietary indicators, our trade setups, the charting platform, everything we have to offer. Okay, the only thing you can't do is get into the members area and go to the partners meetings. That said, there is a partners meeting tonight. If anybody that's on the free trial wants to get into the partners meeting, you need to become a partner. I'm going to go over some cool stuff tonight. This line right here that you see, the copper colored line on the copper market, I'm going to go over that not only on the copper market, but I'll go over it on every market that people want me to go over it on anyway. I have it shown over here on the NQ right now as well, but I have at least that to talk about. And then if anybody else has anything they want me to talk about, any other partners have anything you want me to talk about, please send us an email. Let us know. Okay, let us know ahead of time that you want us to cover things, and we'll be happy to cover them. Let's see. The partner status. If you do not know what it takes to become a partner, if you do not know what it takes to become a partner, just send us a quick email at support@cfrn.net, and we'll send you off all the information you need to become a partner. All right, we do have a sale going right now, and the sale has a deadline, and that deadline is 4:15 this afternoon. Okay, just send us a quick email. All right. Now, let me jump into the trades. All right, there was a question here. Steve asked, have I noticed any liquidity issues with the Russell? How many contracts do you believe can be traded until issues arise? The Russell, well, how many contracts are you talking about? 100? You're going to have issues with 100. 10? You can trade 10 before you have any real issues. 20? You might have a little slippage with 20. But up to there, I think you're probably okay. If you're going to trade a lot of, if you're going to trade 100 contracts, 50 contracts, over 20, I would say, you're going to have probably more than a tick of slippage. You might have 1 tick or 2 ticks of slippage with 20 contracts. In most cases, you could probably trade 30 or 40 contracts with 1 or 2 ticks of slip. But 3 contracts is fine. Yeah, you shouldn't have any issues with 3 contracts. Okay, you might get 1 tick of slip on 1 of those 3, but it depends how you enter your orders. Of course, I use limit orders on everything. I don't enter market orders at all. My stops, I trail my stop with a buy stop or a sell stop, and that is a limit order. It's set to be a limit order. It can be set to be a market order, but I use a limit order. All right, so all my orders are limit orders. So I don't get much slippage usually. I don't get much slippage. Occasionally I'll have a buy stop on to enter a trade instead of exiting a trade, and depending on what the market's doing, I might get some slippage on that. Okay, it'll trigger it, and then it'll jump a tick before it fills me. But usually there's no issues with it. The stuff that I just said about the slippage with a buy stop or a sell stop, that wasn't on the Russell. That was on soybeans that recently happened, and it happened on gold too. Gold right now is the market that's got liquidity issues. Today it's not that bad, but yesterday and most of the last week and a half, gold has had liquidity issues, meaning that you're usually looking at single digits on the bid and the ask. Even right now, I'm looking at the ask right now, and the total. Hang on, let me just put this thing up here, and you can see it. Right here, the total bid and ask sum right here, we have 82 spread over 10 contracts. That is low liquidity right there. Okay. Now on the ES, you can have up to over 20,000. But right here on this, there's less than 100 spread over 10 different price levels. That is pretty low liquidity. Okay. Whereas like right now on the Russell, I'm looking at it, it's got 162 on the ask and 174 on the bid. So it's not that bad. Okay. You got at least 10. Usually at least 10 per price level. Okay, sorry, tangent. let me go over here. Let me go over here and get into the trades. Okay, I did say I was going to try to get this done, didn't I? Now we accidentally changed our template this morning, and when I did that, it wiped out all the marks that I had made, all the trades that I had entered into. So I'm just going to go through pretty quickly here on the crude oil and show you where I think I took trades this morning. We took 5 trades on the Russell. On the Russell we took 5. On crude we took 4. Okay, we took 4 trades on crude oil, and I'm going to show you where I think I took them. Did I have any losing trades? I had 1 winning trade in the pre-market. Okay, it was around here somewhere. It was right here. I think that I had a winning trade this morning in the pre-market. Okay. It was an 8-tick win this morning, right in there in the pre-market. All right. I believe I entered short there, and I took 8 ticks profit, and I missed the next move down. When the markets opened up, I had 1 losing trade and 3 winning trades. Okay, my first winning trade I think was right here. I took there was no divergence there. It was not right there. 949. I'm just going through it. It was probably right in here. Okay, that I had my first winning trade. It's probably right in here. I believe we were up 13 ticks at one point on crude oil before we started trading other markets. And I took some profit in here, and then I think I took another trade right in here, and I ended up losing on that trade. So I was plus 13 ticks, I think, after this trade, and then I lost 8 ticks on this trade. It put me at plus 3, and then I took 1 more trade somewhere along the day here, or actually 2 more trades. I must add a break-even trade, and then another one where I got plus 2 ticks. Okay, that's what it looks like. I took out all the things that I had drawn on the charts. Or over here, look, I had this trade over here. I didn't take that out. How did I? What market is this? Crude oil. And I got plus 5 on crude. I'm looking at it right now. I have plus 5 on crude. I must have been down or something on crude because I took this trade right here and somehow I'm at plus 5. I don't know. I don't remember. I didn't I didn't mark everything up. I did mark everything up, but I don't have it here. Anyway, let's skip crude. Okay, we're plus 5 ticks on crude. We'll go to the Russell, because I didn't switch the template around on the Russell. At least I don't think I did. And if I didn't, then all of my marks are still there. They are. Okay. So we have the trades that we took care of on the Russell. The first trade that we took on the Russell was right here. We had a bullish cross, tested the BBC with an up close. We got long in there, and we took a little bit of profit right over here. We missed the next trade, which was right here. That went for an easy 10 ticks, and the next trade that went for another 10 ticks. This, I don't know why I drew that in there. I think I was showing that we were in a box. We took a short trade here after the bearish cross down below the BBC. We tested the BBC and gave a down close with a bearish divergence. We took a short trade in there, and we ended up taking a little bit on that. Price then turned around, changed directions completely, and started moving up. There was opportunity up here to get long right there, and then I waited for it to give a deeper pullback, and I got long on this move right here. Okay, we took some profit on that. I think we took like 10 or 11 ticks profit on that one, and that put us up pretty good on the Russell. Okay, the next one that we took put us up just a little bit more. I think I got 5 ticks out of this. This, I think, put us up 12 ticks, and this put us up to 17 ticks, and that's where we ended the morning session at plus 17 ticks profit. All right, the Russell right now is, well, it just gave a shorting opportunity right here on the down close of this bar, right there. Now let me draw a trend line so you can see. And this is pretty much what I do in the live trading room, guys. As the market's moving around, I'll draw trend lines all over the place for you, and I'll tell you where trades are setting up. And when I can take them, I do. And I'll at least let you know that something's setting up when I see it. Okay? As it's setting up, I'll let you know, not after the fact. Right now, we're down here. The green line has gotten down into the cycle portion of the slingshot, so you can anticipate a pullback here at this point. Okay? That is what we have going on the Russell. We ended the Russell plus 17 ticks. Okay. Gold, we took a couple of trades on gold. Did we take 2? I think we took 2 trades on gold this morning, and we ended plus 13 ticks, which was an improvement over yesterday's minus 12 ticks. I started watching it early, and it was trading pretty well. When I say trading pretty well, what I mean is it had excuse me, it had decent liquidity, so it wasn't jumping around like crazy. That's the problem when you have really low liquidity. Going back to that question that was asked a few minutes ago, when you have really low liquidity, a large number of contracts is going to make the market move significantly. Even a mediocre number of contracts is going to make the market move significantly. Okay, but this morning, for a good part of the morning anyway, the gold was acting pretty well. It stopped acting pretty well right in here. I know we had one partner who had a buy stop on up here looking for it to move up, and he ended up taking 40 ticks out of this move up right here, I think. Al? I'm not sure if he's out there right now. But anyway, over here there was an opportunity to get long here, and another opportunity to get long here. The end of the morning session, I opened the live trading room up this morning at just after 7 o'clock, and it was open until 11:30. It was open until about 11:45. But I moderate the live trading room. I go in there at 9:30 until 11:30. 11:30 is the end of the morning session. 11:30 Eastern time, Gary. Okay. The question is, when is the end of the morning session? All right. So price went up here, and there were plenty of opportunities here to take trades. I didn't take any because I was kind of hesitant to trade gold. When I saw that gold seemed to be acting okay and it was trading okay, I decided to take some trades. That wasn't until way over here. On this first trade, we took, I don't remember what we took. We took, what do we have on gold? 13 ticks. I think we took 8 ticks profit on this one. All right. I think that's what we ended up taking, was 8 ticks profit on that. It gave a lot more than that, but that's all we took. There was another one right after that we ended up not getting filled on. There was one over here we tried to take. We ended up not getting filled on. There was one over here we did take, and we got 5 ticks profit on that one. Okay. There's a lot more trades in here on the gold than what I've actually pointed out. There is a lot of winning trades, not too many losing trades, but I'm sure there's losing trades in there as well. I'm not going to go through every single trade setup, but Right, Gary, I'm referring to our live trading room, not anything particular to the markets, right? That's what I'm referring to. Just the live trading room. Okay, the morning session of our live trading room. This is the afternoon session of CFRN, and the morning session is the live trading room. Okay. Anyway, right in here we were looking for the bearish cross and the pull away from the BBC. The bearish cross of the MA1, which is the blue and red line, down below the BBC, which is the green line, and the pull away from the BBC. Here, I'll show it to you in a picture. And as soon as the picture populates, here we go. Here it is right here. And this picture was done in, I think we made this, I think, in January or something like that. And it was crude oil, but it's the same thing across every single market. You look for your bearish cross. Now, you use the trend lines when price has so much momentum that it doesn't pull all the way back to the BBC, or when the color of the cycle is changed. Okay? Or when the color of the cycle is changed. So we had the bearish cross pull back up toward the BBC. It didn't actually hit the BBC. And then it closed down, gave a down close below the trend line that I drew with bearish divergence to confirm the move down. All right, so we entered short. We took some profit. It did it again right here, the same exact thing over again. This time the cycle was the wrong color and it didn't hit the BBC. And we missed that trade, but it did continue moving down. Okay. That was pretty much it on the downside. There was some trades in here on the long side, I think. The black line was below the BBC on that one, so there's no trade there. Yeah, it might have gotten long right in here. Short over here, short over here. Let's see. Right in here you might have gotten short, and if you did, you would have stopped out. You might have followed that up with another short. Well, you would have been looking for the other short over here. Okay, but there was no divergence, so there was no trade in there. This was the next long trade that I took right in here. We took some profit on that. And then the next opportunity, well, it was over here. This down close right here. This was after the morning session ended. This is at 11:33. We wrapped it up. Well, we stopped trading at about 11:30. But there was another one right here. And what is this, gold? There was another one right here for the move down. There was another one right here for this move down. And then it switched directions, and recently there was one right here for the move up. And there is currently one right here for the move down. Now, you need a down close on the current bar. This is your trend line. You need a down close on the current bar. There's the bearish divergence. We didn't get the down close, you see? So now you got to move the base of the trend line over to the new swing low and start drawing it again. So it's going to take at least 2 bars now to set up a trade on here. We're not there yet. Okay? Keep your eye on that. It may pull all the way back up to the BBC, but we definitely have bearish divergence. This right here is bearish divergence. That's what it looks like in a live market. Okay? And I'll keep you updated on that one. The NQ, we identified a few trades on the NQ this morning as it was moving around. You can see the ellipses. There was one right here this morning, started out, that didn't work out at all, followed up by one that worked out just fine, followed up by another one that didn't work out, followed by another one that worked fine, and another one that worked fine, and there were a bunch more in here that worked out, but I didn't follow the NQ all day long, okay? Just a few times when I happened to notice it. Back to the gold for just a second. All right, you see this black line has crossed up above the BBC? That means you don't look for the trade on the short side anymore. Okay? All right, that was pretty much it on the NQ. Let me show you the ES. The ES had a couple of trades this morning. We had a bullish cross here, and we tested the BBC and gave an up close. Now that is a different picture. Okay, that is this picture. And this picture is also crude oil from January, I think. But it's the same exact setup. It's the same everything on every single market. Okay, you get your bullish cross, price pulls away, comes back down, tests the BBC. Or actually, over here is where it tested the BBC, and it gave an up close. You check down here for divergence on the slingshot. If you have the divergence and the cycle is blue, then you can just take the up close off the BBC. Okay. If the cycle is not blue or you don't hit the BBC. Then you have to draw the trend lines. Okay, so those two occasions, that's when you draw the trend lines. There were two opportunities to trade. There was one right here, and there was another one right over here. Okay, this long right here, this up close right here, you see the cycle was the wrong color and it didn't hit the BBC, but the trend line was like that. So you got an up close above the trend line with bullish divergence on the slingshot. That's it. That's the long trade right there. Now, what it's looking at now, we need a down close. Down close on the current bar would give us a shorting opportunity on the ES. Okay. Now that gold, I said don't trade the gold now. Don't go short on the gold because the black line got up above the BBC. Look what's happened. You see it kept going up. Once that black line gets up above the BBC, there's a good chance that it's going to keep going in that direction. All right. Let's see, next market. Natural gas. What we did, the Russell, we did crude oil, we did gold. Natural gas was the next one that we actually placed trades on. So let's do natural gas. Now the natural gas inventories came out today. So we had a whole bunch of movement in natural gas right here. You can see right here at 10:29, 10:30 is when the actual news came out. And all these bars from right here, from 10:30 right there, all the way over to here, are all 1 minute. Okay, so there was a ton of opportunity in there, but it was really, really, really fast. Our first trade on natural gas, there were a couple of them that set up this morning. Yes, we do. I'll show you some on that too. Okay. The 6E, the 6J, the 6A, whatever you want. It's all the same. We had a bullish cross test to the BBC with an up close right here and bullish divergence. We got long on the up close. I think we took 4 ticks profit on that trade. Okay, what did we end up on natural gas? Plus 16. Yeah, we took 4 ticks profit on that trade, and the next one that we took, next two that we took, yeah, I have 3 trades on natural gas. We took a little bit of profit on this one. Okay, I think we probably took, I'm guessing we probably took 2 ticks profit on this one. But this one, it didn't hit the BBC, and the cycle was the wrong color. I drew the trend line. We closed above the trend line. I took profit when it moved up. All right, I moved my stop to plus 2 ticks, and that's how I ended up getting out of that. We took this one over here. William, come to the partners meeting. It's the S1 cycle on. But come to the partners meeting, or just watch the recording of it, and you'll see. Over here we had drawn a trend line up. We got a down close below the trend line. I was a little late getting into this one, but I got in nevertheless, and I believe I took 10 ticks profit on that. Anyway, we're plus 16 on natural gas, but we got short in there and we took some profit. Okay. There were some other things like this right here. This is where that line comes into play, William, and anyone else who's asked about this extra line here on the slingshot. Right in here is one spot where it would have come into play. Right over here is another spot. You'll see. It will be number 108. Okay, but it's not out there yet. And that was it on the natural gas. Now, we had copper going this morning as well. All right, I didn't trade any copper, but there were a few opportunities. Down close right in here was a short. Up close right in here was a long. Up close right in here was a long. That's based on the stuff that we're going to go over tonight. Actually, yeah, it is. There were some opportunities here on the copper this morning, but we didn't have a copper DOM open, so we couldn't trade it. Okay. Now I'm going to change the natural gas to a 6E, just because we have a listener who wanted to see what the 6E looks like. So I'm just going to change it to the 6E, and I'm going to have to remove the drawing objects. Okay. Here is the euro. Now, the euro had some really nice moves this morning. Okay. Usually the euro starts moving back here, is when the euro starts moving usually. Okay. Now we had some bearish divergence in here, tested the BBC with a down close. The first spot to short would have been right here. Let's Let's see, you could have shorted again right here if you wanted to. And let's see, no more shorting there, going long right in here. An opportunity to go long. Then the next opportunity, drawing a trend line, would have been right over here to go long. There's some real flat periods in here, it seems like, on the euro this morning. But I'm just looking at the divergences down on the bottom. We didn't have any in here. It was all backwards in here, so we didn't have any trading opportunities. Then it started going short. It started selling off. In here, let's just look at this. In here, you would have been drawing your trend lines up the bottoms there, over here. Okay, in all these different spots up the bottoms. I probably missed one. I missed one right there, there, here. As long as you have divergence down here on the bottom, you would have been shorting the down close below those trend lines. Okay, as long as there's divergence down on the bottom. Okay, you would have been shorting that thing all the way down. There, right here. The divergence is right here, between the green line and the cycle. Okay, in all these cases. All right. Over here, you see how things got out of whack down here. They changed directions, so you wouldn't have been doing anything right down there at that point. Okay, you wouldn't have been trading at all down there, given that information. Okay. Now, as it moved over and it started to get up above the BBC right here, the MA1 started to move above the BBC. You had bullish divergence. There was one trade opportunity, it looks like, right here. Okay. Right there. And right now, it's got bearish divergence. It's got a shorting opportunity right now. If you were looking to get short, right there is where you would do it. The down close off the BBC, right here at 130.06. Okay, it's got bearish divergence. It's got a bearish cross. It's pulled away from the BBC. It's tested it, and it's given a down close. Okay? The 6B. Well, now I got to take all these drawing objects off. I'll do the 6B really quick. Okay. I'm going to do the 6B very, very quick. I'll just give you a look at it, okay? Okay, I see it, Dwayne. I'm on it. Okay. Same stuff. Trend lines, closing above the trend lines, slopes, divergence, all the same stuff. It all works across all the markets. All right. I am going to wrap up here, guys. If you are on the free trial and you want to become a partner, you need to let us know. Okay. You can give me a call. My phone number is in all the emails that I've sent to you. Or you can just email us at support@cfrn.net. Okay. If you are a partner, there's a partners meeting tonight, 9 p.m. If you are not a partner and you want to get into that partners meeting, you need to become a partner. All right. With that, I'm going to wrap up the recording because it is now 12:44.